Good morning, everybody. And with Gene on his way, I'd like to convene what I think is a excellent panel today of who will be our first responders that immediately jump into a view of what we just heard. I think we heard pretty cogently and quite linearly, which is a very high a word of great praise around the Metro program at Brookings. But these guys are going to provide some initial readouts, I think, on, and then move into some broader reflections. But I think first we want to respond immediately and do some initial reactions to what we heard. Eventually, I will open the floor up, and we'll get a good 10 or 15 minutes of incoming questions for you. I'm Mark Muro, Senior Fellow here at Brookings and the Policy Director at the Metropolitan Policy Program, where I lead our advanced industry and next economy work. Without tipping my hand too much, I'll just say we've focused very intently over the last 5 years on the need for the U.S., in large part through its cities and metropolitan areas to construct a more innovative, productive, and opportunity-rich economy. Hence, our interest in these issues. So we're vitally interested in the country and its places getting things right on manufacturing. So as to our panel, I think we have three people who really are uniquely well positioned to provide, I think, diverse initial readouts on what Gene said this morning, and then more broad reflections. Let me just call them out here. We're delighted to have Marty Schmidt from the Massachusetts Institute of Technology next to me here. Marty is Associate Provost at MIT and a Professor of Electrical Engineering. And while his research and teaching are in the realm of micro and nano technology, he also serves as a key player in MIT's Production and the Innovation Economy Project, a multi-year interdisciplinary inquiry that seeks to understand how innovation is linked to manufacturing and production activities. And I should note he also is the senior officer responsible for MIT's industrial engagements with private sector companies. So I think he has a grounded sense of the pulse of these economies. Second, it's a privilege to have James Manyika here this morning in the middle. James is a director at McKinsey & Company and director also at the McKinsey Global Institute. So he works in Silicon Valley, then he also reflects globally on that work. He's been extremely insightful on many of these issues. And just in the last year, he's helped author several touchstone reports, one including the future of manufacturing last year. Just last week, he released a report on Game Changers, 5 opportunities for U.S. growth and renewal. And in May, he was the lead author on Disruptive Technologies, advances that will transform life, business, and the global economy. He's change-oriented and dynamic. So, and I'll add that he's a non-resident senior fellow here because we like his work so much. So, and then finally we have here Rebecca Bagley, also no slouch. Currently, Rebecca's president of and CEO of Nortec, a technology-oriented economic development organization working to revitalize Northeast Ohio by accelerating the growth of regional industry clusters there, in advanced industry, flexible electronics, even water technologies. Before joining Nortec, Bagley served as Deputy Secretary for the Technology Investment Office at the Pennsylvania Department of Community and Economic Development, where she had a huge investment portfolio. So let's just plunge right in. What I'd like to do is offer each of you first just an initial chance to provide your initial reaction. What are your first reactions? What was interesting to you in what Gene Sperling said? I mean, as a technologist engaged with industry, I think you may have a particular feel for some of this. So interested in your first top-line views.
Well, thank you, and thanks for having me. A pleasure
Absolutely.
to be here. I think, from the perspective of an individual who's been involved in transferring technologies to industries, both startups and large industries and thinking about the MIT engagements and the focus we've had at MIT and thinking about how we move innovative ideas into products and the role that the production ecosystem plays. I really think there's a strong resonance for me on thinking about all these issues from the lens of our innovation capability. I mean, the soundbite I think is it's about the innovation, stupid. I think if we keep that focus, I think that's where we have our impact. I mean, it's clear to us in our experiences at MIT that we can't innovate in new products that are based on disruptive new technologies without a vision for how we're going to make it. And that vision is derived by playing in an ecosystem where product development occurs, where you have access to ideas, people, importantly capabilities, sophisticated capital. And so I think our ability to transition ideas out of MIT is intimately gated by this sort of production ecosystem. And proximity matters. We have an awful lot of examples of that where companies vote with their feet. My favorite example is because I'm a homer is Gillette, in South Boston. Grooming is an $8 billion business for Procter & Gamble. And it's interesting to note that on 30 acres of waterfront property in downtown Boston, Gillette manufactures disposable razors. And why do they do that? Because that's where they do the product development, and that's where they interface with the customer to think about new products. And then once they get it right in South Boston, they roll it out around the world. And where pennies make a difference in a disposable product, that linkage of customer experience to product design and manufacturing is vital. We've all heard the stories of GE's appliances experiences in bringing their capabilities back to Kentucky and how that interplay between production and design works out. And there was a recent study by Liz Reynolds at MIT looking at a particular area of biomanufacturing. An interesting note is that 80% of the production facilities in a particular aspect of biomanufacturing are within 100 miles of the R&D facility. So you can't transfer those things far. Particularly in these disruptive. And the last point I would make is there's this really critical feedback to our campus, and Suzanne Berger highlights this in her preview of our PI work, where some of our faculty that are working on advanced solar technologies really rely on that ecosystem to develop some of the tools that enable the campus research that then drive it out. So it's a very virtuous cycle, and I think the linkage and the focus on innovation when we think about manufacturing is important. And I don't think it's about picking winners in industry. I think the winner we're picking is the American innovator.
Yeah, and certainly he placed innovation front and center. James, I mean, you bring a real feel for complexity and diversity in manufacturing. You say over and over that we don't have a single manufacturing sector, and you have a great sense of, I think, big trends looking forward. So I'm curious, what in your view, what do you find really resonates in what Gene suggested with your experience, and are the things that we ought to be thinking about beyond that? And are you as bullish in some ways as Gene is?
Well, thank you, Mark, and thank you all of you for being here. I think a lot of what Gene described actually resonated quite strongly. I won't repeat the resonance of the innovation observations, Mark, Martin, that you made. But I also think what he said about how we need to rethink questions of how we think about employment, supply chains, the complexity of manufacturing, and also taking a longer-term view as opposed to a snapshot really resonated. Let me comment on a couple of those. I think as we think about manufacturing, even our own work has pointed to the fact that the jobs in manufacturing are actually quite different now. Even if you look at we typically think of the roughly 11, 12 million jobs in manufacturing. Well, of those, close to a third of those are not really assembly line jobs anymore. They're actually quite different. They look a lot like services jobs. And then you look outside of manufacturing, outside of the 11, 12 million, you also have a lot of jobs that are very connected to manufacturing, engineering, design services, et cetera, which are typically not counted in manufacturing. So the question of how we think about jobs is quite different. But the other thing that I also wanted to reinforce is one of the things that came through very clearly in our own work, looking at just micro and macro analysis, but also seeing what companies do, which is something that I spend a fair bit of time doing, is manufacturing is actually not monolithic, actually. And I think we tend to think of it as kind of one big lump. It's really not. And we did some work thinking through, not so much in terms of is it automotive, is it metals, but to think about what are the inputs and dynamics that drive manufacturing. So labor intensity, R&D and knowledge intensity, energy intensity. And you take all those inputs, you suddenly realize that you have something like 4 or 5 big groups that are going through very different dynamics. I won't take you through that, but if you look at the renaissance, or at least what's happened in the recovery, it follows that pattern quite consistently. So for example, if you want to look at output growth that we've had since 2010, if you want to look at jobs growth that we've had since 2010, if you want to look at even the inflows of FDI, foreign direct investment, that's going towards greenfield investments in plants and manufacturing facilities, or if you want to look at exports, that's been led largely by 3 or 4 parts of this, primarily. It's been automotive, machinery, fabricated metals. If you look at those 3 parts of manufacturing, they've driven most of what we say. If you look at the 500,000 jobs that Gene talked about, that's certainly true, but something like close to 80% of those are in these 3 places: automotive, machinery, and fabricated metals. If you look at the output growth in GDP output, again, you come back to these 3 sectors. If you look at what's happened in inbound greenfield FDI into the United States, something like $135 billion have come in since 2010. Close to $100 billion of that has gone to manufacturing. Most of that has gone again to these 3 segments. So you start to see that, as we look at the dynamics of what's going on, it really depends on which part of manufacturing you're looking at. And the ones that have come back, the ones that I just mentioned, they're the ones where the demand has been strong. It has a lot to do with proximity to the markets. It has had a lot to do with companies and other investors looking to make locational decisions, mostly informed by where demand is, where the supply chains are, where the knowledge and innovation happens to be. So you look at that, and I think you start to explain what we've seen. I think to your question, Mark, about, am I as bullish about the Renaissance? I think it's important to keep a historical perspective. I think to the extent that we've seen job growth start to flatten since basically I think it reached its peak in about February 2013 in manufacturing. We saw the same thing happen after the recession in 1991. It's what you'd expect to happen. But to the question of if I take Gene's counsel, which I agree with, which is not to have a snapshot, but look forward, there's so much more that's still promising to come beyond what's already happened. We have hardly even tapped into the benefits for manufacture that are going to come from shale energy and shale gas, for example. Our own work already estimates that just the impact of shale energy in this economy by 2020 will probably lead to something like 1.7, 1.8 million jobs. And of those jobs, yes, some of them are going to be in oil and gas production itself, but almost an equal number are going to be in manufacturing. That is hardly even kicked in yet. You look at some of the innovations we're talking about, whether it's the software example that was given or 3D printing and all those things, they've hardly yet kicked in. So there's enough that's forward-looking, that's promising. But will that magically solve the jobs challenge that the U.S. economy has? It won't be enough. Yeah. I think there's a lot more that's required to solve the jobs question.
And I'm going to want to return, I think we'll want to dwell on the job nexus and the relevance to the middle class shortly. I mean, so Rebecca, you have a strong regional and subnational perspective, I think, on all of this. And I think we heard a fairly strong discussion about the centrality of place at different scales, even less than 100 miles, less than 10 miles. So I'm curious, someone on the front lines in a region, what did you hear in this conversation this morning?
I think, obviously when Gene talked about the spillover effects in every sort of example that he gave in the sub places of that really built on the idea that regions are critical when you think about manufacturing and when you think about how to build up that manufacturing base within the U.S. or continue to build on what we have. One of the interesting things as I was listening was the discussion of the industrial commons. And for me, that word has been, floating around quite a bit lately. And the way that he defined it around multiple, not only supply chain, but research and development, OEM, sort of that complexity, in my mind, it also worked back into the clusters area. And so when you think about, because when people would say manufacturing clusters, I'm like, well, that's not really accurate because it's not an industry vertical, right? It's a cross-cutting. So I started to see an interesting lattice work when you're doing work in a region of the industrial commons being sort of an overlay and overlaying the industry and cluster work, like we just did a roadmap in water technologies. And everything that we do in Northeast Ohio is really based on the manufacturing economy. And so when you think about the industrial lines and clusters and overlay that with the idea of industrial commons, so much of what we then do as an intervention, the things that the market is not doing are pretty much the same, right? So you're thinking about interconnection of that ecosystem for product development. You're thinking about interconnection of that ecosystem for stickiness to manufacture here. And so all of those same concepts, and certainly there's some unique ones, but all of those same concepts then overlay. So I was fascinated because I've been having trouble in my own mind, and many of you might think that we had the speech days in advance, but instead we were puzzling out sort of during the speech around sort of how that, so those were the things that were going through my mind is bringing those things together, because I think on the ground in Northeast Ohio, working with our MEP center, that's pretty much the thing, what we're doing is here we have all these market opportunities that are coming up, and we have this manufacturing base largely based on the three industries you talked about. That's where our growth has come from over the last 2 years. How do we bring those things together in a way that then leads to U.S. competitiveness, Northeast Ohio competitiveness? And so that was one thing. The other thing that I'm still puzzling about is the supply chain piece, because I think that there's so much more to the interaction between these SMEs, small to medium-sized manufacturers, and the larger Fortune 500 companies, or so we can get into this maybe a little bit more later, but that anchor partner relationship, we're seeing it play out over and over in Northeast Ohio, where we have smaller companies that are working with the Rockwells and the Avery Dennisons and the Eatons, and it's not necessarily always in a supplier relationship. So I think there's some complexity there too that be interesting to explore a little bit.
Yeah, excellent. Returning to Marty, and I do want to pick up first on the innovation theme that was so strong here. And I think it was suggested that innovation plays to our strengths as a country. I want to push just a little bit, though, on how well we're really doing on that front in certain ways. Talk to us about what you and your colleagues have been, concluding about the state of the, U.S. innovation system. Because in some ways we heard the quote about, significant gaps as well. And a lot has happened. A lot has been lost. Are we well positioned for an innovation decade in manufacturing in the U.S.?
Well, I think we need help. I think when I can think of specific anecdotes of technologies that we've transferred or things we've learned through our PI study and companies we've talked to, this notion that the ecosystem is hollowed out, that the industrial commons has cleared out, we really see that quite tangibly in specific examples and in talking to companies. I think, and it's kind of clear in hindsight that where the capital markets have pushed the large vertically integrated firms to be more capital efficient and shed capacity, which is not perceived to be a core competence, and going to sort of distributed supply chains and more lean manufacturing, that slows down the innovation process because you don't have all the knobs to turn to develop that next generation product. And that key supplier that's going to enable the next innovation isn't across the street or even under your same roof, but he's on the other side of the continent or on the other side of the world. And that slows things down. And I think it's really critical. We did a lot of, we've looked at startups out of MIT. We've talked to large firms. When you ask companies in general, How long does it take to take a disruptive new idea that requires a new process, a new technology, and generate revenue and a product based on that? It's north of 10 years. I have a company that I started 12 years ago. They're just getting the product in the market, and that's not uncommon. Large manufacturing firms talk about the same thing. And so it takes a long time, and we think, our view at MIT is that it's a rich opportunity to think about how you compress that time. Right. And what's the R&D agenda, and what's the policy agenda that strengthens the ecosystem and compresses that time and plays to our competitive strength.
Yeah. Building on that, James, I mean, you have written a lot on the array of disruptive technologies coming, many of which seem incredibly exciting, and I'm wondering to what extent you view the technology explosion of the next decade as beneficial for the U.S. Positioning. And again, looking at that segmentation of industries, what does that mean for this country? Should we be optimistic about how this will play out for the U.S. in this sector?
I think we should be, but I want to go back, maybe add something to the previous question and discussion. One of the things that's quite interesting, particularly as we work with many companies on this question of innovation and supply chains, is that I think you're starting to see a significant shift. I think we used to do for decades lots of work on lean manufacturing, lean supply chain, getting things to be incredibly efficient. I think you're starting to see a change where there's a lot more excitement about how do you make supply chains more resilient and more agile and more responsive, almost above and beyond just simply being lean and efficient. And I think that's starting to change. And I think that shift, I think, plays well to the trends and the capabilities and potential, particularly of the U.S. economy. And I think we're seeing a lot more of that. You're also seeing the requirement for that agility and that flexibility and resilience to be very closely linked to where the markets and the demand happens to be. Right. It's still the case that the U.S. is still the world's largest market, despite what you might think, right? It's still the largest market globally. So I think all of that bodes very well. I think when you look at the raft of new technologies that we're starting to see, I mean, we did some work where we were looking at these technologies mostly from the point of view of not so much what's cool and exciting, but more which of these things are going to have some economic consequence because they touch big chunks of the economy or big supply chains or big profit pools. And there's roughly a list of 10 or 12 of these things. But what you see across those technologies is that you're starting to see new supply chains that are going to emerge to support that. So I think, take 3D printing. I think when we talk about 3D printing a lot, we talk a lot about the person in the garage making prototypes. I think that's very exciting, but we don't talk enough about the underlying supply chain that's going to need to be in place to actually help bring those products at scale into fruition. We don't talk enough about that. So as you look underneath the covers of a lot of these technologies, there's a lot of scale change and scale innovations that are going to have to come into play. The good news, and you look at that list of the roughly 12 that we had, is that most of those innovations are actually mostly originating here. Most of the breakthroughs are coming from the United States. So the question is, can we scale up the infrastructure, the capabilities, the supply chains, the skills and the talent to fully capitalize on that? I think that's where real work is required for all the talent challenges and infrastructure challenges that we all like to talk about.
And that's where we've fallen down quite a bit in the past,
Absolutely.
Right? And where some of that overlay, I think, in the clusters work that I was talking about. I was thinking about also during Gene's speech and some of your comments. I don't think it's going to be seen as individual firms like, Avery Dennison moving something back and having their manufacturing closer to their productivity and just that on the ground things. I actually think also, at least we're seeing in Northeast Ohio, that it's going to be firm to firm. So, whether it's supply chain innovation, that's what made me think about it again, or, in the flexible electronic space in Northeast Ohio, we're seeing firms locate relatively close to each other within a few miles, and then cross-pollinating employees and different things, because while they have some same base, I mean, it's almost like Semitech in a sense, but teeny tiny, they have the same base issues, but they're not competing for the same markets, and so they're able to cross-pollinate a lot of the different technology issues. And so you're seeing that, play out really dynamically across firms, not necessarily just in a single firm and its supply chain. So I think that's another piece. And I can't miss the opportunity to talk about the additive manufacturing, center, because Youngstown is within our region, and we've been working on a tech belt collaboration for many, many years, about 8 to 10 years. This is sort of our big win was the additive manufacturing center, and I think it affords a great opportunity to be able to really focus not only in Northeast Ohio but nationally, how to build out that supply chain, and that obviously is one of the big focuses, and then to obviously break down some of the technology barriers there. So we see that as a huge opportunity in Northeast Ohio to be able to, and for the nation, to be able to build out that supply chain aspect in both places, but have hopefully some concentration from our perspective in that tech belt region from Pittsburgh down into West Virginia and into Ohio.
I mean, let's stay here, and I want to ask both James and you about then, let's code this into the, top line metric that the country's obsessed about, which is certainly job creation. So let's, and you widen the aperture to talk about the supply chain. Let's talk about the extent to which this does or can't contribute significantly to the construction of as the president said, an economy that grows from the middle out.
Right.
On the one hand, you've suggested some caution here. Meanwhile, you're on the front lines in a region that has seen some job growth associated with all this. Do you want to each give us your, what's the appropriate way of thinking about this, the implications for middle class job growth?
Well, so certainly from my point of view, I think it's a moderately optimistic view in terms of if you're thinking about jobs within the manufacturing sector. I think we'll see bigger gains in terms of either output or productivity or GDP, but I think jobs will grow. But I think we'll have to moderate our expectations if we're trying to imagine that manufacturing will go back to where it was at its peak in the 40s and 50s, where it was the high 30% of employment. I don't think that's realistic in a very large services economy, and that's just because, and we're talking shares of employment. So while I think manufacturing employment itself will grow as a share of the economy, the services part of the economy is just too big and growing too quickly. So I think we have to moderate our expectations. Having said that, though, I think already we've seen a big record growth in absolute jobs in manufacturing. I think that it's hard to deny that. And I think and the fact that we still have more things ahead of us than behind us that are going to lead to job growth, shale energy, innovations, that's very, very, very optimistic. I also think it's quite important. I think the gentleman from Siemens made an important point, which is also linked to some of what we see. I think we have to change our mindset as to how we think about what constitutes a manufacturing job. So I think if we're thinking of manufacturing jobs as assembly line jobs, I think that's a very narrow view. Right. I mean, we're starting to see a whole raft of different kinds of jobs. Software coding, maybe software coding is a factory job of the next decade. We see a whole set of service-related jobs. We see a whole set of cascade set of jobs in the supply chain. And I think it's a little bit of an artifact of the way we code this data that we don't even include, for example, engineering services or design services part of manufacturing. Doesn't make sense to me. But so I think we have to have a much larger aperture. And many of those jobs, by the way, that we're just talking about, pay a lot, actually. Those are decent jobs, pay very well. They're very attractive, very competitive. Part of the challenge, we don't often have the right skills. So you'll hear, and I spend a lot of time with companies, the difficulties of finding the talent. And I think and that's a big area for us to work on. And it's not just the STEM degrees. Yes, of course, STEM degrees are very, very important. I mean, I think it's not great that the U.S., if you look at people who graduate with STEM degrees, it's something like 15% of graduating classes have STEM degrees. Right. That's behind Mexico and China. China is graduating 42% with STEM degrees. So we have to solve that. But put that aside, you also have the more vocational technical skills that are also in short supply. And these are not, STEM degrees at elite schools, right? I mean, these are very practical, needed technical vocational skills that we're not creating at the size and scale and pace we need to.
Yep. Yes.
I'd like to add just on this one point. In the MIT study, we looked at, we took a database of manufacturing firms in the U.S., separated out those that had doubled their revenue in a 4-year period from 2004 to 2008, and also grew their employment base. And there are about 4 attributes of those companies, those so-called champion manufacturers. One of them was a lot of their growth was derived by figuring out how to bundle important services with their manufactured products.
Right.
And I think that job component is really critical.
Absolutely. So again, getting to the question of what is a manufacturing enterprise, it's frequently this hybrid of manufacturing, software, digital activities, and so on. Right.
Actually, just to add one other point, I'm actually quite impressed with one of your former colleagues, Rodney Brooks, and what he's done with Baxter, for example. The reason why the Baxter robot, to me, is quite interesting is, I love robotics, but not just because it's robotics, but for the first time, it changes how we think about the human-machine interface and the kind of skills that are required to be able to train and work with very complex equipment, as in Baxter. So that also has an impact on how we think about the jobs, the skills required to operate quite complex machinery as well, which will help.
Yep. I mean, and then, so in Northeast Ohio, then give us a quick read on what you're seeing in the employment front, and then turning to this critical training issue. And are you feeling significant choke points there in the occupations being served?
Right. I think obviously, we hit on a lot of the same challenges nationally. It becomes a microcosm in a region of those challenges. Our unemployment rate is slightly higher than or slightly lower than the national average. So from a sort of national perspective, that's okay. I think, this middle class issue and having so relied on manufacturing through the decades, and then, needing really to continue to make sure that happens in the future. I think that is very sort of evident in all the policies and the work that Northeast Ohio does. And even like I was talking about earlier in the clusters work, these are just market opportunities that cut across manufacturing companies. I mean, that's sort of how it ends up, so the product opportunities and things build those teams. And then, the manufacturing hopefully then also, or not hopefully, but we have very specific ways in which we, connect that back in. I think one of the things I wanted to bring up here, because I think, it connects to some of Gene's comments too, is the administration and the work that they've done with the cross-agency solicitations, like the Jobs Accelerator. SBA has a clusters award that we've won, and we're able to then partner on multiple, so with our MEP Center, with our community college on the skills gap. And one of the things I think that's a challenge is sort of the projection of where you need the jobs, right? So the timelines don't match up. Community college needs to build a program, or a university needs to build, capacity in a certain place to be able to train and put out a certain type of worker, yet companies are not able to say in 3 to 5 or 10 years, where they're at. So what we're doing with our Jobs Accelerator is the community college is really working in more of the cluster concept. So if one of the companies fails, there's other jobs in that vein that will be available in 3 to 5 years when the community college is actually putting out graduates that have that, that trained expertise. And so that's just one example of the things that we've been able to start to pilot or test on the ground as we're trying to figure out how to solve for that, because I think there is, that hollowing out of the middle class, as Gene put it, I think is a real issue in the industrial Midwest, and how we make sure that we continue, because our economy is not going to shift. Well, Pittsburgh's an interesting example, shifting into some of the software, the healthcare. I don't think we'll see as major of a shift in that. I think we still are going to have a very industrial and manufacturing-based economy, and obviously if that's declining, then we're in significant trouble over the years. So we need to transform that. We need to be thinking about how we base it on innovation and technology and new market opportunities.
Let's turn to policy. We heard some shorthand about it from Gene.
Yeah.
I'm curious, Marty, from your work both through this systematic, PI project at MIT, but also your work, directly with companies. What is the short list? What are the top, interventions that we need at the federal level, since we're here in Washington, and then, but I think then also, what are the regional responsibilities?
Yeah, so I think there's about 4 things I would mention. I mean, we really believe in the concept of the Manufacturing Innovation Institutes. I think it fills an important gap, and I think I think having participated in the AMP activity, we were just delighted that at least one of the first data points in the experiment was that the commitment to create an innovation institute unlocked a lot of investment from state governments and from the industries who needed to get that risk pooling in order to advance that technology. So we think that's a great concept. I think the small and medium enterprises are really struggling, and I think particularly at the regional level, there's a lot of things that state and local governments as well as the federal government can do to help them be successful fostering these public-private partnerships around employment, job training. I think there's lots of great examples out there, and I think figuring out how to share best practices and promulgate that, I think, is really critical. I think on the education front, I think that's a really critical area. The community college level education, I think, is really critical, but there are probably new delivery models that I think could be more effective in that space. Look, and the last one,
speaking of online solutions,
exactly. And the last one I'd mention is one thing that I don't think we've really seen a good solution for, but it's a significant problem, is access to capital. It's an issue for small and mediums. State governments are working with them on that. But one of our studies at MIT of startups, when it takes 10 to 12 years to go through to get first revenue, we're past the point of the publicly traded PowerPoint. So that period of pre-revenue IPOs is gone, and the venture capital industry chokes on that last round of investment that takes the scale up. And interestingly enough, in our experience, we studied MIT licenses 20 startups a year. We studied 200 of those startups from 97 to 2006. Interestingly enough, 75% of them were companies that make a product that if you drop on your foot, it hurts, as opposed to a software or a service. And when you look at what happened with those, 60% of them still alive. But what's interesting is they've reached this inflection point, and Liz Reynolds at MIT studied this carefully, where they need another, say, they raised the first 60 million, no problem, sort of. But that last 60 to go into production, a lot of those investments are coming from foreign investments. Rush Nano, Singapore government, Chinese government, and those carry a commitment to do something in that host
because
region.
U.S. sources are just not there.
Well, interestingly enough, they're actually somewhat attractive to the investors, the original investors, because typically they're non-dilutive investments. So I think this access to capital is a challenge.
Let's do one more reflection from you, and then I want to open it up to the audience.
Okay, that sounds good. I just wanted to build on that a little bit, because I think one of the critical things that people have talked about is products into market, right, and shortening those timelines. And that's really what a lot of our work is focused on, is bringing together consortiums to commercialize products faster. So what's that speed to market, and what are the market opportunities? But one critical piece of that is, we call it industry-specific funding. And so it is a lot of times non-dilutive capital, but it's also going to sometimes not just one company. So the venture capital market is not necessarily, so the supplier needs to, retool a line. The, company, I suppose OEM is the best term for it, but the product sort of innovator, has more of a venture capital need. And so I think that industry-specific funding piece, that's where the federal government, I think has a role, and with their existing funding, and plays that role. But we're trying to get better and better at in our regional level at taking advantage of what is offered, in the federal government as grants and SBIRs and different things that, the timing issues sometimes impede, but I think, have a major impact. So from a funding perspective, that's certainly a great role, that the government can continue to play.
And clearly there's that important regional role on
Right.
much of this, yeah.
Exactly.
Yeah. One thought, and then I want to open to the audience. Yeah.
Yeah, I think from a policy standpoint, I'm certainly not in the role of making policy prescriptive recommendations, but I think I'd certainly aim the policy firepower probably at 2 or 3 areas in terms of formulating policy. One thing is we do know that, for example, while the US, I think, has done better in the last 3 years than it's done in a long time in terms of attracting foreign direct investment, there's a lot more that could be done, because we do know that when you have whether the US companies or international companies, the world's most productive, innovative companies investing in your economy, it drives performance and growth. And we do know from a supply chain cluster standpoint that most of these large companies, they purchase close to 80-90% of their intermediate inputs from smaller firms that are local in their environment. So the more you can do to get large corporations, quite frankly, who have a lot of money on their balance sheets and so forth, to open that up and invest, that's going to make a big difference. However you do that, whether it's thinking about reforming the tax code or R&D tax incentives, that's a big area to think about. The other area to think about is also infrastructure. We know that from working with a lot of companies that, among other things, infrastructure and the quality of it is one of the big areas that actually influences some of the choices that companies make, particularly in this sector, given all the things we said about supply chains and so forth. So to the extent that the US, which is lagging in terms of the rate at which it invests its infrastructure by any study that's out there, that's an area I think where policy firepower could make a big difference. The third last area is this whole area of talent and education and training. What's striking to me about that is I think while all of us can think of lots of examples of community colleges that are great, and the problem is none of those are operating at a scale to meet the challenge, right? So the jobs training skills challenge we talk about is denominated in the millions, right? And yet we often talk about small scale micro solutions. So there's got to be something to bring these questions, to have them be addressed at national scale in some meaningful way. So I'd aim at those 3 areas.